All right, good morning. How we doing, everybody? It is 8:30 a.m. EST. It is Friday, the 5th of January, and the new year has started off with a bang. Okay, the markets have been pretty volatile. Um, I thought they were going to stay a little bit more compressed than they are, but it's just pretty wild out there. We'll talk a little bit about what I think has happened, but in the end, I think that the markets were held up through December, and I think that they will go ahead and see some gravity as that December holdup wears off. Okay. So what I'm going to do first, though, is I'm going to throw a QR code up really quick. So go ahead, zap that if you want to come find out about us, more about what we do. I'm going to talk about that at the end of the show. We're going to talk more about the content here, pretty much straight into the content. But long story short, we help people become traders. So go ahead and zap that. Come check us out later. And also, if you're watching this on YouTube, please like, subscribe, hit that notification bell, all that stuff. I'll throw that QR code back in the top left corner there, so you can always zap that later. So let's go ahead and jump right in. I'm going to take a look at the calendar today to see if any economic data is coming out. Let me go ahead and share the screen here. All right, we're going to refresh this screen. So this is forexfactory.com. It's a good website. There are others. In fact, the charting software that we use has news events on that as well. Some people like to prefer to use that. That's called TradingView. So you could always use the data that's on there. There is some data coming out right as we speak, though. So if you were in the markets right now, it might be that you were getting thrashed around. The average hourly earnings, the non-farm employment change, and the unemployment rate just came out for the U.S. And you're looking at not too far from the expected numbers, with the exception of the employment change. It looks like the employment change itself is going to look like a positive number, and with that, it's pretty far beyond the expected 168,000 jobs. It's actually up to 216,000 jobs. And when you have a deviation that's strong to the upside, what that means is that there's a lot more jobs that got put on than expected. And when that happens, people think, okay, the economy is doing better. And the whole idea behind hiking the interest rates was, okay, we need to hike these rates so that we can kind of cause some things to break in the economy. And that way we can, stop the inflation, right? That was the whole idea behind hiking the interest rates. Every single month when Jerome Powell talks, that's pretty much what he talked about. It's like, as long as the economy remains strong in the current state, there's going to be inflation. And the only tool we really have to fight that inflation is to make money more expensive, because when money is more expensive, it is harder to invest in things, and companies have to be a bit more cost conscious, and they have to be more careful, and people will spend less money, and it will just cause a bit of a contraction, which then will stave off the inflation. That's the idea. Now, there are better ways of handling this, but that is one. And in this case, as long as the economy remains strong like this, all these numbers are green, which means good for the dollar, basically, right? Unemployment rate went down, new jobs are added, hourly earnings month over month are better. They're better than expected. So basically, not that these numbers went down, but they just exceeded the expectation. The green number is the data. The white number is the expectation. The white number to the right is the prior month. So if these numbers exceed expectation, the idea is that the market thought it was going to be something worse, and it ended up being something better on all of these very important numbers. So that means the dollar is going to get strong. And that does also mean that a lot of your stocks and everything else are going to go down, because they're, with a strong economy, the expectation is that cuts will not happen as soon, or perhaps we might even see another rate hike. Now, let's think about it this way. We do understand that these numbers can be fudged. Okay. So, and when I say fudged, for those of you who maybe don't understand that term, what that means, because I know we have kind of an international audience here. It means that there's a little bit of maybe lying that goes on with this data, and that's just a part of the deal. But whether or not the data is real, the effect on the market will be the same. Okay. And we could really see it in the Forex market very easily. This is the EUR versus the USD. This is the euro versus the dollar. Now, don't let all that crazy screen bother you. We're just going to look right at the price. Let me go ahead and zoom in, make it a little bit easier for you to see. And this will happen similarly to a lot of your stocks. We'll take a look at like the Dow Jones. We'll take a look at some important stocks to see how this affected it. But these candlesticks are 5-minute candlesticks. Minutes worth of price action, and everything was kind of calm right up until this data came out, and it really took a hit and went down very hard. What does that mean? Well, this is a forex pair. This is a foreign exchange pair. This is the euro, which is the European currency, in terms of the dollar. So right now, you see to the right there, each euro is $1.09 approximately. Well, before this, it was $1, and it was higher. It was almost $1.09.3, and now it's below $1.09. So the euro went down in terms of the dollar because the dollar got strong. So anything that's traded against the dollar is probably going to see some weakness today, and that includes a lot of stocks. That includes a lot of everything because everything is traded against the dollar. In this case, you have the EUR, which is the USD, right? And now that the USD is strong in this case, or getting stronger, even though this data may, this might be temporary, there could be new data, but for now, the dollar is getting stronger based on this news. And because the dollar is getting stronger in comparison to the dollar, the euro is getting weaker. And this is why we have the price of the euro heading down now towards $1.08, okay, instead of $1.09. These are relatively small moves. You're talking about a penny, one 1/100th of a dollar. However, in Forex, these are sizable moves. This kind of move in a Forex market is actually pretty big. And there's going to be a new video that I'm putting out today for the beginners. And it's a beginner video about trading in general. And so, this might help to understand just the very basics of some of these concepts. Okay. So let's see how this news might be affecting like the SP 500. So the SP 500, what that is that is a group of stocks that that they put together in a group, right? And then you would trade based on the aggregate, the entire combined price of those. And SP 500 is a very popular thing to trade. A lot of your funds and things like that will trade the SP 500. A lot of where people put their retirement money, you're going to trade the SP 500. And so here's an example of that right here. You got a pretty hard move down, based on that news, although the SP 500 was already on the way down. So I'm going to go back to that crazy looking screen. Like I said, don't let it scare you. It's just, it's an overall data for me. And we're going to go to what's called a higher time frame, right? We're going to look at a lot more history here. This is going back to December. Actually, it's going all the way back to November. And you can see November through December was very bullish. Price went up very hard, and it actually went higher than it was in July. It broke this resistance, right? This price in July went up, and then it headed down, and that creates resistance. And then, of course, price broke above that here, okay? However, once once pretty much the end of the year happened, there was this kind of a panic sell right about here, right in this area. And then price kept going, tried to break above that, and then ended up failing. And now we have price headed down pretty decently, and the market has not opened yet. So the price right now, actually, for the pre-market, for the people who are buying and selling before the market opens in New York, price is all the way down here right now. So it's looking at doing what's called a gap down, and a gap down is the same as what you would see. Let's do right here. This from here to here on that market open back on the 2nd of January, price jumped down, right? So the market was closed and then it opened and price jumped down really hard. Now, if you want to look at this without these gaps, which really is, kind of fine, we can look at the E-mini and you'll just see how everything is just falling without the gaps, right? Because the E-mini is a futures market and it doesn't necessarily close. So here is that look, and this is on the 3-hour chart. You're going back all the way to December here, and since the beginning of the year, really basically the end of the year of last year, beginning of this year, you're seeing price really start to take a tumble. And so the idea was that if you watch the Fed meeting, which basically when Jerome Powell spoke in December talking about the interest rates, What he did was he did what's called a pivot. Before the meeting, he was talking about, all of his press conferences and everything. We're saying, it's not quite time to talk about cutting rates yet. And what he meant by that was it's not really time to think about making money cheap again, right? He's saying that we need the economy to, we need the markets to fall a little bit. We need things to be tougher for businesses for a little while. We need to make sure inflation doesn't get out of control, right? And that was 2 weeks before the major Fed meeting in December, when he actually makes the announcement what he's going to do with the rates. And then what happened was in December for that Fed meeting, he actually pivoted. He said it differently. He says, hey, we need to think about cutting rates. And a lot of the market did not expect that. A lot of the market expected him to say what he said just before that, before the meeting, and say, hey, we're not really ready to cut yet. And then he went ahead and got what we call dovish, right? He said, oh, well, we might have to cut. And the whole market spiked up hard. And I think I have to look at the calendar, but I think that's right here. On the 13th of December, and for for maybe 2 or 3 days, it just went straight up, and it kept going up for all the rest of the year. But now we're seeing the price kind of melt down a little bit. And as a matter of fact, one thing that I'm noticing just from the price action, and this is something for the new traders to kind of bear in mind, this is a parabola, more or less, right? So what I'm going to do is this. The shape of this is actually pretty bearish. When you see this rounded top, or the opposite, if it was kind of going down and then coming up, any rounded look right there, that can mean the price is actually going to continue down for a bit. And today's data was important. There were 4 different data points that came out that we talked about at the beginning of this show. When all 4 of those data points came out, that really kind of sealed in more of this move down. So it would not surprise me on this SP 500 and all the indexes to kind of come down to this area right here. It would not surprise me to see it come back down to some of its prior highs from last year. Because last year, these were the highs. We're going back to August, July. All throughout the summer, you saw a price on the SP 500 come up to this kind of 4,600. And, you had that area, you had it up here, right? And then I'll show you on the Dow and also on the NASDAQ, probably similar type price action. But I would expect to see price head back down to this 4,600 area as the dollar gets strong and everything else that traded against it gets weak. Because just like the euro, the SP 500 is measured by the dollar, right? So you have the SP 500, and then you have the USD. And then when you look at that, let's get rid of that again. When you look at that, as the dollar gets stronger, which is what's happening because of that news, the SP 500 is going to get weaker. And this is why we see it falling, just like we're seeing with the euro. Now, it doesn't mean it'll continue to fall, but I do think we will see revisit that 4,600. And let's see here. Yeah, it's pushing down pretty hard. So all that data at the bottom of the screen, I wouldn't worry too much about that right now. But what I can tell you is that based on all of that data, it does look like price may continue downward. So all that data that I have up there that I just took away, that is part of my algorithm. I actually, I don't use all that data. Some of that data up there is just for testing. So it looks like it's a lot more complex than it really is, but I'm always testing. It's actually most of my time, 90 some odd % of my time trading is either studying or testing. That's how that works. Actually clicking the button and making money is the very minimal part of what we do, right, as traders. Most of the time, we're just, looking at our methodology. We're building our trading method, otherwise known as an algo, and we are looking at the market and we're studying. That's like 99% of trading. So, entering the trade and then making that money and all that right there, that's a very little amount of the time you spend as a trader. And by the way, an experienced trader, that whole thing is boring. The whole thing, if trading is exciting for you, you're probably doing it wrong. And I know that's going to sound really odd, but once you develop a trading algorithm, once you actually understand how to read what you see on the screen there, along with like all this stuff right here, and it doesn't have to be this complex. Even for me, it's not that complex, right? I use about half of that maybe. But once you understand how to do that and you have a system and you're just kind of following rules and you're entering trades based on those rules and you're exiting your trades based on those rules, the whole thing just becomes boring, right? And you just like, you're making money and it's not that exciting. And that's when you know you're a real trader, when it's not that exciting. Because when you're getting excited and like, oh, I'm in the trade, I'm up $200, and you're just like all excited, that means you're a new trader. And it means that fear and greed can have an effect on you. So one of these mornings, maybe Monday, one of these mornings, we'll talk about the psychological aspect of trading. Because let me tell you right now, look, you can have the perfect trading method, right? You can have studied it and you can have tested it, and you know it's a perfect, it has a great profile for your risk to reward, and it's got a great profitability and all these things. You have it all mapped out and it's all beautiful. You can have all that, but if you don't have the psychological aspect of trading figured out, you're probably going to quit. And that's a fact. And the reason is that when you go back and you test and you develop your own algorithm with your own personality imbued upon that, and you go back and you test, you're going to see these loss streaks where you lose 2, 3, sometimes 5 or 6 in a row. And then you're going to win 12 or 13 or 15, to make up for it. It's okay. But when you see those loss streaks and you don't know that those exist, because maybe like, let's just say you develop a method and you only test it a few times and you just decide to run with it, right? Well, the problem is it might be the perfect method, but you didn't test and you didn't know that, like, hey, actually I might lose 5 times in a row, like you don't know that because you didn't go back and test. And because you don't know that, if it ever happens, if you go on a losing streak, you might think to yourself, hey, you know what? I just lost 6 times in a row, 5 times in a row. And I don't think this is for me, right? But actually, it might just be that you're having a bad streak, and it happens. It really happens. I mean, just go to a casino, go play the roulette table. You might win 4 in a row. It's just really odd when that happens, because in reality, with any game in the casino, you're supposed to lose more than you win. But people go on winning streaks. That's why casinos are successful. The same thing's going to happen on the losing side too. You're going to go on losing streaks. But the whole idea with trading is that, unlike gambling, we've tilted the odds in our favor. I put a video up on X 4 days ago, and it's a bunch of like baby boomers, a bunch of retirees, a bunch of pensioners, and they're just sitting in front of a slot machine and they're clicking the button like drones, man. They're just clicking the button over and over, and staring at the screen, and they're clicking a button. And oh man, that to me is just, I don't even know what to say about that. I have nothing positive. Look, if I go to Vegas, I know that the odds are against me in Las Vegas or wherever gambling happens. The only time the odds are kind of in your favor is if you're playing poker, and that's another story. But if you're sitting in front of like a slot machine, blackjack table, roulette wheel, the odds are against you like every time there. That's why casinos exist. If the odds were in your favor, casinos simply wouldn't exist anymore because they would be poor. Like there wouldn't. So if you're going to sit there in front of a slot machine and just click a button, the odds are against you, and you're going to slowly lose your money. And that's how that works. So what I do is, in a sense, what we do is we develop a method where you can tilt the odds in your favor. Sure, when you trade, you might lose a few, but you're going to win more than you lose. And that is what a real trader does. All right. Yeah. And you understand that because you have created this method. You've gone back, you've tested it. You develop some mathematical figures. You say, hey, this wins for me 65% of the time. And I also have a really good risk to reward ratio. And what that means is that every time you trade, you actually are going to win more than you lose. And when that happens, then of course you're profitable. So that's what we do. Let's take a quick look at the, let's do the Dow Jones. Let's see, Dow Jones. So we'll do the US 30, right? And this is going to have a similar look. Yeah. It seems like it was a bit stronger, but I think there's a decent chance, if things continue downward, for the Dow to come back down to 35,000. It's at 37,300 now. But for much of the year, it kept bumping its head on basically 34,000, right? That's going back to, the summertime. That was 2022, right? So all through 2022 and 2023, it would like to hang around 34,500. It peaked out in the summertime at 35,700, and is, if what I think happens in the near term, this might head down a little bit. Now, I do think that they're going to cut rates later this year. I don't know when. I have some ideas, but we don't share those ideas publicly. We talk about that in Algo Factory. So, I do think that the rest of the market will continue upward, but it could be that what we're seeing right now in the stock market and in these major indexes is a pivot where price may just kind of head back down to one of its prior highs. Could happen. It might take, might take the whole month. To me, I'd say it's reasonable to happen by the halfway through this month, or even towards the end of the month. It's any of these kind of times in the near future. Quarter one, that could happen. But what might also happen is that maybe Jerome Powell comes out and says, hey, we're not going to hike rates again. He might come out and say something dovish like that. He might come out and say, hey, we're going to cut rates. He might do that in January. Anything can happen, but what I do expect is for a price to cool off and head down to this 35,700. So we're nearing the end of the show, but we got V the Gorilla who just popped on with us. What is up, brother?
Hey, man. Lots of good things. Got some great intel that I'm working on right now that I'm going to be dropping on Thursday. So listen, if you haven't joined Algo Factory, you're trying to figure out if this is for you or this is not. Look, this is 2024. It's a new time. It's a new you. It's a new market. The opportunity is boundless, and the opportunities are relentless. You want to make money? Now's the window to do it. You want to get into the window before the window snaps shut on you. So join us at Algo Factory. You're not only going to learn how to trade, but also to build the algorithms that trade on your behalf. And you understand the geostrategic, geopolitical, geoeconomic play, so that you can profit from what's coming. And this is the only place in the world that does it, right here, Algo Factory Tech. Thursday, got some juicy stuff for y'all. And that's only in the private room. Go ahead, Kevin.
Oh, yeah. We'll talk a little. We got a lot of new listeners and viewers right now. So sure. I want to kind of talk a little bit about that. Look, V the Gorilla has been working in precious metals and strategic metals and a lot of things like that for, I don't know, V, 20 years?
About 13, 14 years, almost 15 years at this point.
Almost 15 years. So V the Gorilla has been working in high level strategic metals, precious metals, and now institutional Bitcoin dark pool commandeering, basically selling large amounts of Bitcoin to very large players. And so when you work with people at that level and you have done so for over a decade, what you end up with is a lot of really high level information. Yep. So when you got high level info, what that's going to do is it's going to help you know which way the wind is blowing. And there's two things that us as traders will do. First, we will use this technical methodology. We'll build our own trading method, which another word for that is algorithm. Don't be scared of that word. Just go to the YouTube. There's a whole video on what is an algorithm, and it should dispel that. Everybody thinks it's this magical thing, and it's not. The other thing is that we use that high-level info that the Gorilla brings in. He knows what's going on, kind of like geostrategically, what might happen with this group of countries, what might happen with that group of countries. So from an economic and geostrategic standpoint, the Gorilla is able to tell us which way the wind is blowing. And when you know that, you can kind of plan for the future in your trading. Look, we're about to hop off here, but do us a favor, mash that like button, smash that like button, mash it like a potato. Give us some likes, give us some comments. What is up, Imagination? Thanks for coming on, bud. I think I know who you are or who you might be. But yeah, we appreciate that. Oh, looks like we can comment on X, dude. This is cool. All right.
Oh, that's dope.
Yeah, that is dope. If I'm reading this right, I didn't know we could comment on X.
Yeah, look at that. Wow.
Yeah, that's badass, dude. Yeah, if you're on X, yeah, dude. And this, I'm broadcasting this on X, obviously. So if you're on X, go ahead and say hello. We do ask you guys and gals to come over on YouTube, though. That actually helps us out with the algorithms. But hey, man, if you're watching on X, that's just as well. If you have questions during these morning shows, this is free to the public, right? So in about 5 minutes, we're going to shut this down. We're going to go over to our private live lab, and we'll do this for another 60 minutes, and we're going to be answering questions. We're going to be doing charts. I'm actually going to do some charts that, people might say, hey, what do you think Bitcoin's going to do in the next day, in the next week, in the next month, in the next 6 months? And we're going to chart that so people are able to kind of have some data on which they can rely when they're doing their own trading decisions, right? So, we chart whatever you want. Yeah, I'll chart stocks, precious metals, crypto, ETFs, swaps, you name it. I'll chart it. And that way, if you are trading, you can have some extra data. So please do that. In the meantime, though, like I said, subscribe, share, do all that stuff. And this is free to the public for 30 minutes. That's actually a pretty badass thing. So while I do have people's attention, are there any charts that we want to see in the last few minutes of the show? Gorilla, you got something you want to see?
No, I guess we'll jump into the private and go over some key cryptos, man, that I'm looking at that is starting to surge, my friend.
Okay, cool. I'm going to just take a quick look because we got a few minutes yet left. I'm going to look at Bitcoin as a chart, and it looks like everything is still pushing up. There have been a lot of articles out with regard to a possible ETF. So we'll look at that. But, and of course, the ETF conversation has been going on for months. I mean, that's not exactly news, but there's a lot of hints out there that the ETF could be imminent. And then there's other people saying that maybe it gets canceled, and there's a lot of crosstalk. It's a little hard to actually understand what's happening with ETF. But the good thing is, via the Gorilla, my man does have some info that might be better than just kind of reading your average news, outlet or whatever it is. But right now, Bitcoin is in what appears to be a consolidation. It did attempt to break out. What that means is that price kind of goes back and forth within this range, right? Within a box or with upper and lower bounds. And as it does that, one thing that traders will do, if you are that kind of trader, if you're a range trader like I am, is I do range and breakout. And if it's within a range, I will not, I will let it hit the bottom of the range, and then I will simply go long once my algo tells me I can. And going long means, like, say, betting on the price going up. And then once it hits the top of the range, before it even goes there, I'm out of that trade. And then I will actually take a trade in the other direction. As it touches the top here, I will, as soon as my algo says I can, I will go short, and I will bet on the price going down. And then, of course, I will make some money in that direction. So obviously, this has been profitable for those who have done this. On the higher time frame right here, going back to December, 3 big trades in that. And of course, there are many, many trades within those trades on the lower time frames. And right now, it does appear that Bitcoin is relatively bullish and pushing up towards the top of that range, despite a lot of things. So it makes me think that perhaps the right people know about the ETF. We're going to talk about that, or at least we'll ask the Gorilla about that coming up here right now. Let me see if I can add on Telegram, because we didn't, we're going to start doing this live lab only in YouTube and X. And then we're going to move to Telegram after that for future reference for our private members. So let's go ahead and see if I can morph into that. Okay. All right, cool. Well, Gorilla, give us that send off. We'll get out of here, and then we will go into the private.
All right, good. All right, guys, listen, here's the deal. We're getting into the private room. Don't hesitate. For less than the price of a bottle of water, $1.66. Where the hell can you buy a good quality bottle of water for $1.66? Well, here's something refreshing for you. Algo Factory. Learn how to make money anywhere in the world, in any market, in any condition. Right here, algofactory.tech. Join us, or just stay however way you are. Join us,
or die. A tear. You brought a tear to my eye.
I'm glad you like it. All right, K-Boy, take us away.